Good morning and welcome to Almus Market Mornings, your daily dose of global financial updates with me, Swaraj. It was a cheerful day for the domestic markets as Indian inflation edged lower in the month of August, while the industrial production was much higher than expected. It seems like a perfect situation to be for the country, but not without its challenges. Oil, for example, is steadily trading above $90 a barrel, and it is not just challenge for India. If you heard most central banker commentaries at the start of the year, everyone was expecting inflation to moderate this year. Seems like oil prices are just starting to disagree. Morning, JK. Interesting day yesterday for Indian markets. Inflation lower, industrial production higher, but we have oil prices lurking in the shadows. Seems Mr. Das will remain cautious. What do you think?
Yeah, good morning. I think the easing in inflation, headline inflation in India was definitely expected because the vegetable prices, which had shot up through the roof last month, rather in July, had eased off in August. So therefore, maybe it has fallen a little more than what was expected, but still, I mean, important point to note is that we are way higher than 6% mandated upside limit of inflation number for MPC, and therefore there is no case for being relaxed on inflation, particularly in view of the fact that oil prices, as you said, are once again higher. 2% rise yesterday, after having risen about 12% in the last 3 weeks, and about nearly 28% in the last 4 months. So it's not going to give comfort, because of course, as a policy, Indian retail prices, pump prices are not increasing, but somebody is footing the losses, because you cannot have global crude prices going higher and retail prices being retained. The oil market companies, or effectively Indian government fiscal, will be affected if they continue to fund the difference. So either one which way, oil has an impact. That is on the fiscal side or on the inflation side. The other side is higher, with India higher demand. It also has an impact on the import bill. So foreign exchange is effectively seeing some impact for these prices. Yes, industrial production was better, but again, that's a very volatile series, and both these numbers do not have as much impact on the forex India rupee, despite they being away from what was expected. But definitely today we have the banner banner event of the week, that is the CPI from US, where there is a expectation of increase in the headline number from 3.2 to 3.6%, and the core to drop from 4.7 to 4.2%. And if this comes as expected, it's good news, I would say, and the Fed would be happy. But any higher core number will pose them headaches. And I mean, while I say they will be happy, at least they'll be happy because it's not increasing. But at the same time, so long as it doesn't come below 4%, Fed is going to remain vigilant. They are going to keep the rates higher for longer, and expect more easing in the coming months to think of any cutting in the rates. And right now, the expectation is cuts not before May 2024. Overall, the markets yesterday was quiet, but there was some sell-off in the global equity markets, particularly on the US markets, because of the rise in oil prices, which is likely to eventually push up the inflation, and also bad news from Oracle, which actually saw the Nasdaq fall 1.2%, and the global index also fell by 0.33%. All these actions coming ahead of the crucial inflation number that is ahead. Even the yields were somewhat in a narrow range, but they were well supported on the downside. I think again they will take cues from the retail inflation numbers that is ahead. And don't forget that the retail inflation number will be followed by PPI number, and also the retail sales number on Thursday, that is tomorrow. And we will also have the ECB meeting, policy meeting tomorrow, which looks like there will be another hike by 0.25% as per the latest expectations of the market. And if they don't hike, if they go for a pause, that will be slight surprise to the market, because their inflation is still on the higher side, but it's going to be very tough balancing act for ECB, and they have to consider growth as well as inflation. The latest indicator from Germany, that ZU saw a marginal improvement, but if you look at the overall picture, the ZU has been falling for the last 4 or 5 months continuously. It's in the negative territory actually for the last 4 or 5 months, and therefore, as we updated yesterday, Germany economy slowdown is eventually going to impact even the overall region's growth as well. Therefore, the policymakers will be mindful of the growth aspect when they consider their rate hike. So on the currencies, the euro has slightly recovered from its low of 1.07 and lower ahead of the ECB policy meeting, and also some expecting the US CPI to be softer. But I think this is all within a correction, and after having broken clearly well below 1.08 and below the 200 DMA and trading below it for several days, I don't think it has enough momentum to push above 1.08 now. And after this correction, we expect the euro to in fact, we'll take more cues from what ECB has to say about the forward guidance after. So more than tomorrow's decision, it will be their forward guidance about their actions in the coming months. On the yen, of course, we had a reassessment of UEDA's statements over the weekend. Therefore, once again, the yen has seen weakness at 147.50 now, and maybe pushing towards 148. See, the view that is emerging among many analysts is that even if BOJ starts to change their policy, it will be in very baby steps, and the differential with the US will still remain high, and yen will not strengthen too much. So I think policy moves by a larger measure or a direct combined with direct intervention, that's the only way the yen can be actually strengthened. But right now, I don't think Japan is in a mood to take such aggressive action. In fact, official statements on yen and the policy continue to be contradictory. On the UK, we had we have had another poor data on jobs. We had an unemployment rate rising to 4.3% from 4.2%, although expected. But the number of people employed was much lower than what was expected, and only at the same time the wages were rising. So it's a headache for the central bank there also, because whether they would look at the inflationary wage inflation or at the economy, which is starting to look soft. And of course, we'll have more data today on industrial production, GDP, and also global trade. Next week we will have the retail inflation from UK as well. So lots of data to digest, and the policy moves by central banks that is expected next week. We also have the crucial FOMC meeting where a pause is very well discounted, but I think their forward guidance and also the dot plot will be crucial for the markets. So expect a dollar to be a bit volatile, but definitely should take some good directional move post today or tomorrow's data, or even maybe even if it continues to be in consolidation post FOMC, I think we will have a good move on the dollar. On the rupee, once again, it was a replica of what happened on Friday. A foray above 83 by the market was again attacked by RBI selling, and we saw a quick fall rather to 82.90 or lower after RBI intervened quite heavily. So they're making their intentions very clear, but at least in recent moves up in the USD INR, not so much speculative based. I think they are quite based on real flows. Therefore, one may not be surprised to see RBI relaxing if the moves in the dollar index are seen to be on the higher side after the nearby events are concluded. So remain vigilant on the INR because it's not going below 82.80. At the same time, 83.10 is holding only because of central bank. Thank you.
Thank you, JK. And just to quickly summarize, yesterday Indian headline inflation moderated as vegetable prices fell, but we are still higher above the 6% mandate for MPC. Oil prices remain a concern. Oil prices rose by 2% yesterday. For rupee, we saw RBI intervention above 83. From 83, we saw a quick fall below 82.90. Event for this week is CPI from the US. Expectation of increase in headline and a drop in core numbers. Higher core number might be a surprise for the markets. Post CPI, we have the ECB policy meeting tomorrow. It seems another hike by 25 basis based on the current market pricing. We also have the US retail sales data tomorrow. When it comes to UK unemployment rose to 4.3% from 4.2%. So a very interesting set of times ahead. Do tune in tomorrow as we discuss the latest in the financial markets. Thanks for listening.